This video will show how a law firm that represents a purchaser on closing date, how to record closing costs and lender transactions. So what exactly happened? Well, the lender deposited the purchase price of the house, the closing cost, and our legal service fee into our law firm's bank account on one particular day. And on that same day, we then pay the seller the closing costs, we pay the seller the price of the house, then we pay the other service vendors the closing cost, and we keep the rest as income to us. So what accounts would you need in that situation? Well, here's the chart of accounts of our example law firm from QuickBooks for Attorneys, on sale now at marksmolin.com. And you see we do already have legal fees earned as the income type of account. Income from legal fees. So we already have that, and of course we have these other expenses that we have to pay, and of course we have customers and vendors, and this is an example file of a law firm, and now we're going to get specific in this situation. Well, we already have income from legal fees, and we already have a bank account, and obviously you would use the quote-unquote trust type of account when you collect and pay on behalf of a client. But it's just a bank account, which is simply another bank type of account in your chart of accounts. And then, of course, we have to add this account, closing costs payable, which is another current liability. And that will represent the money that we owe to everybody when we make a deposit and receive payment from the lender. At the minute we receive from the lender, we immediately owe the buyer, we immediately owe the seller, and we immediately owe the vendors for the closing cost. So this account would only have a balance in the brief moment between the moment that they made the deposit in the account and the moment that we physically paid the seller of the house and the other vendors. So this account we're going to add now, and it's another current liability. So we just do this. Scroll up to the top and click New. Now, this is an other current liability, and the detail type usually doesn't affect much, but you might as well put trust account liability just because it's the closest description. And then type in the actual name, the name that we're going to use, closing costs payable. So the proper name now we should click Save and Close, and we should see closing costs payable added to our chart of accounts. Now, before we record any transaction, let's take a look at the trial balance. We'll click Reports, Custom Reports, and I set up a trial balance, and you can see that right now the legal fees, the income from legal fees is $8,200, and the bank account, which we will use as our trust account, is $13,200, or let's say the money that we're going to deposit and pay from in this transaction. So these numbers will change accordingly, and of course the account that we just added will both appear after the deposit and then become zero after we pay out everything. So this is the situation. We use the deposit window to record the receipt from the lender, and for the payout we use the expense or check window in QuickBooks, and you probably have to write several because there are several vendors and several closing costs. So it's very simple. What's our example situation? Well, let's pretend on July 1 we received $35,000 from Lana the lender. Now, our legal fee for the service of representing the buyer is $3,000, so that's the amount we're going to keep forever. Then We have to pay $25,000 to Penelope, the prior owner, and $2,000 to Tommy, the tax collector, on behalf of the local town for taxes as part of the closing costs, and $5,000 to Connie, the contractor, to certify that the house is safe. And all those together, believe you me, equal the $35,000 that we received. So it's, these are just example closing costs, and this is an example situation. So let's remember the numbers in the trial balance, and let's take a look at how to record it. So first, we have to go to the deposit window. We click the plus sign, and in the other column, we click bank deposit. Now, the date the date that the lender put the money in our trust account was July 1, and we're going to use this bank account as our quote-unquote trust account, the place where the money is physically deposited to before the payout. So now, we received from whom? Now, we received, this is how it goes. We're supposed to record the deposit this way. We received from Lana, the lender, and we're going to put the account, the other current liability that we just made, closing costs payable. We're going to record on the first line from Lana, the lender, that we received $33,000, not $35,000. Excuse me, $32,000. Sorry about that. Jesus. Okay. $32,000. $32,000. The other $3,000, we're going to put the name of our client, Bonnie the buyer. And the reason we have to put her is because the income is the remaining $3,000, and that's income. It's down here. It's where is it? Somewhere here is income. Income from legal fees, because that's the service we provide. And that amount is $3,000. So as you can see, the total that's being deposited is $35,000 in the physical bank account, in the physical trust account, but only $32,000 is owed and is payable out. The other $3,000 is not payable and would not go into that account. So this is how you record receiving the money, because a portion of that money is yours for the legal fees earned. Now look what happens when I click, let's just save and close. We now go back to the trial balance, and you can see the trust account has increased, go down, by the amount of that deposit that we just received from Betty, the Lana, the lender. Okay, and going back to the reports and going back to the trial balance, you can see that income from legal fees was $8,200 before. Now it's $11,200 because of this deposit. $3,000 went into income from legal fees, so we can track our income. So now when we go to reports, the trial balance looks the way it looks because we're only half done. Okay? Now let's imagine on the same day we pay 25, 2, and 5, because that adds up to 32. So 25,000 is, each of these three we're going to pay separately, and they're going to make the the cost payable become 0. So if you look at the trial balance, closing cost payable is 32,000. If we don't screw up, if we pay everybody properly, this will go down to 0 on the same day. Now, when you click expenses, add an expense, you could really either this expense window you could use, or you could use the check window. Check and expense is really the same thing. If you're physically writing a handwritten check, you should open this window. If you're transferring the money to each of these vendors online, or each of these people online, maybe it's better to use the expense window, but you can see they're the same effect and the same result. Now, this is the physical account that the money is coming from. And the person whom we're paying, if we're paying the prior owner, we're imagining it's this person, Penelope, the prior owner. Now, the money is coming from the bank account, and it's going to that liability that we created, the other current liability, closing costs payable. and the amount that's decreasing, the owed money decreases, or the amount we indicate as owed decreases by $25,000. Be very careful not to allow the billable check mark, but you should associate it with the particular customer that you're making the transaction with. So you should put Bonnie the buyer here, and of course do not mark it billable. So if it was a check, you'd put the check number here. If it was a transfer, you'd put some of the transaction related thing here. But what we're doing is we're taking $25,000 of the money we collected into this bank account a moment ago, and we're decreasing closing costs payable because we're paying Penelope, the prior owner. Click Save and Close, and when we go back to the trial balance, you can see that now our bank account is down by $25,000, but so is closing costs payable. There's only $7,000 left. And if you look at the instructions, you can see that $2,000 goes to Tommy the tax collector and $5,000 goes to Connie the contractor, whatever. The point is it all comes out of the trust account and decreases closing costs payable. So let's just record those last two. Same thing, expense, and this is a new transaction, a new expense or check. It really doesn't matter. Okay, make sure the correct trust account is chosen here. And again, you're going to put, who is it now? Tommy the what now? Tommy the tax collector. We're going to give him $2,000. So we click here, type the letter T so it filters it so that we can go to Tommy. The tax. Boy, I really thought I put him on the list, but I don't care. You can put him on the list at the minute that you could click add Tommy the tax collector. There he is. Okay, whatever. Now, we're still going to put the amount that we paid, which is $2,000, but the money is coming from here and it's going to what? It's going to it's going to pay off this current liability, closing costs payable. And of course, you have to put Bonnie the buyer because this transaction is associated with Bonnie the buyer. So now we click, maybe we'll do save and new because the other one was $5,000 to Connie the contractor. But even though the money was going to Connie the contractor, it's still coming from that account, closing costs payable. And the amount was $5,000. So each of these separate transactions for each of these separate closing costs to each of these vendors, make sure billable is not checked, and then you would choose the particular customer. By choosing this customer and by choosing this vendor, you'll be able to run reports by customer and by vendor and be able to see these transactions as a part of it to retrace what you're doing if you need to. But now when we click Save and Close, we go back to the trial balance, and now you can see closing costs payable are 0, and you can see the bank account has decreased back to exactly what it was before we, oh no, not exactly, it's $3,000 higher because we earned $3,000 more in legal fees. This one, income from legal fee. We earned $3,000 more here, so this, the bank, our bank account, all that's left over in the account is $3,000. And of course, if your trust account was separate from your operating account, you would just transfer it out. And of course, the adjustment for imperfections and mistakes is coming in the next video.